Can you think of a single market where you have a fixed supply that's actually diminishing and demand is at an all-time record high and the price drops? That's what we're seeing right now in the silver market. So the support levels I was watching was, number one, the 200-day moving average. I thought that was likely to hold. It didn't. The next support level was $24.04 to be exact, and that was the last low from back in January. And then below there, the next major support really is until $22. Now, every time you lose a support level, the next one becomes more likely to be tapped. So we lost the 200-day, came down and tapped 24. We're bouncing from 24 today. We'll see if that holds. I think the most optimistic scenario, and I'm not calling for this, but it would be really nice to see a weekly close back above that 200-day moving average. And that would leave what's called a wick below the 200-day. Those lower prices would have been rejected. Then we get a close back above. We'll see if we get that. But the next support level to watch is $22. I suspect there's a lot of money on the sidelines that is waiting to scoop up that bargain if we get a pullback to 22, because a lot of technical analysts have been calling for a $22 price target for a few months now. So I suspect there's a lot of money waiting to buy that dip if we get it, and I would consider myself amongst them. And my contrarian nature actually likes this, and I think in the fullness of time, this quarter will be viewed as a fantastic buying opportunity if you have a long-term perspective. That's personally how I view it. Now, that doesn't mean that everyone needs to go out and try and nail the bottom. There are several different strategies that you can employ here if you are bullish over the long term, but I think this is, in the bigger scheme of things, a fantastic buying opportunity. On social media, everybody is bearish. People are throwing in the towel, and we're seeing that. We have a large member base, especially on the free side, and people are they're mad. They're throwing in the towel. They're saying, let's look at other asset classes, and saying, why invest in metals markets if they're manipulated? And again, my contrarian nature likes that. That's signs that we're closer to a bottom than a top. So the longer term trend is still up. And, I view these as opportunities. Our human emotions often tell us to buy when we should be selling, to sell when we should be buying. And, the time to maybe consider taking some off the table would have been last August. But, certainly I wouldn't be selling here. So I like to look at the average of the last two bull markets, namely from 1970 to 1980, and then 1999 to 2011. Now, the average of those two bull markets in gold was about 10 years. And gold, if I remember correctly, going from memory, the average of the two was up about 15x. So if you look at the beginning of this current bull market is beginning in December of 2015 or January or 2016, and you project that out 10 years, that takes to the year 2026, and then a 15x return on gold. Gold bottomed at $1,000 or $1,045 to be exact. So 15x, that is $15,000 gold. Now again, that's just the average of the last two bull markets. It's simple math. Now, if you apply the gold to silver ratio to that and apply a conservative target of 50-1 to gold silver ratio, that gives you $300 silver. So those numbers, $15,000 gold, $300 silver, would be a muted replay of the 1970s bull market. It would be a damped down replay. I think we're going to see an amplified replay of that bull market. Yeah, exactly. Back in March of 2020, that ratio reached a historic extreme of 123-1. Since then, silver has outperformed gold by almost a factor of 2. That ratio is down to about 67 or 68-1 right now. I think it got as low as like 64 or so. So over the intermediate to long term, I fully expect silver to continue to outperform from here. Historically, though, that ratio peaks at about 15-1 at the top of a bull market. Now, it doesn't stay there very long, but that's about a reasonable target. It's also interesting to note that silver is mined from the ground at about a ratio of 8-1 relative to gold. And silver is consumed in industry, where very little gold is consumed in industry. So I think that ratio is going to continue to compress. However, we've come so far so fast in the last 12 months that if you look at a long-term chart, that ratio, it looks just like a straight line. So it's reasonable to expect, I've been talking about this for a few weeks now, for that ratio to kind of back and fill a little bit. So there's three ways that can kind of happen over the short term. Number one would be gold and silver both fall, it's just gold falls less. Gold and silver both rise, but gold rises more in the short term, or they meet somewhere in the middle. And over the past week or so, we've seen both metals fall, but silver has fallen by more, kind of backing and filling a little bit on that ratio. But over the long term, I think silver is certainly likely to outperform. So there's two primary categories I look at. Is number one would be the monetary fundamental drivers for the metals, and then number two would just be simple supply and demand. So both of those are extremely bullish. So the monetary factors, I mean, that this should, at this point, it should be obvious to everyone. I mean, they're talking about $3 trillion infrastructure bill, $2 trillion for COVID relief, and with no end in sight. So, I mean, there's going to be inflation, obviously. The amount of currency that's going to be created over the next few years is going to be absolutely unprecedented. That obviously is going to benefit the metals over the long term. The silver and gold markets have a 6,000-year track record of being the prime beneficiary of this exact kind of monetary and fiscal environment. Now, to add to that is the bullish supply-demand fundamentals. The numbers out there vary, and it changes from time to time, but there are multiple claims of ownership for every ounce of silver that actually exists, specifically on the COMEX. And we're already seeing shortages of physical silver. I mean, Miles Franklin, I'm sure you guys are seeing a record demand and probably tight supply. We're seeing the Perth Mint unable to deliver to retail investors. So the supply-demand fundamentals just add a whole nother bullish element for the long-term perspective. Can you think of a single market where you have a fixed supply that's actually diminishing and demand is at an all-time record high and the price drops? That's what we're seeing right now in the silver market. I mean, that just shows how blatantly manipulated these markets are. We've got rising, exponential growing demand, decreasing supply, and the price falls. Makes little to no sense unless you factor in the manipulation of the COMEX dealers. But to answer your question about Bitcoin, yeah, I mean, obviously it's siphoning some demand away. I mean, I don't think there's any denying that, but I don't think it's enough to say, hey, it's replaced gold or replaced silver. I don't buy that argument for a second. But yeah, sure, I'm sure it's siphoned a little bit of investment dollars away from the precious metals market. Everyone compares Bitcoin to gold. I compare it to like speculative mining stocks because people will say, oh, Bitcoin's up however many hundreds or thousands of percent. But look how much gold is up. Well, there's a lot of junior gold miners and silver miners that are up 10x in the same period of time. And I consider them both speculative assets. There's a lot of risks inherent to Bitcoin that perhaps aren't being accounted for. I don't view Bitcoin as money. And I don't think in the end it's going to win the day. I think in the end, if anything, a lot of that Bitcoin investment funds are probably going to flow back into the precious metals. The Bitcoin market is going to see a lot of opposition, I'm sure, from governments around the world. Now, whether they win or not, I don't know. That remains to be seen. But I think a lot of those funds are probably likely to flow back into the metals. And, I like to talk about this too. A lot of the things that draw people into Bitcoin are attributes that are also shared with silver. Silver is a finite quantity. There's only 750 million ounces mined every year. Bitcoin, there's 21 million that will ever be mined. So there's a similar attribute right there. So silver is ripe for a speculative mania, just like Bitcoin. And I think in the end, precious metals will be on top.